Yo, what is up, everyone? My name is Dom, and we're here talking about unusual options activity. Alright, let's kick it off with the disclaimer. So, disclaimer, this video is for educational purposes only. The statements made in this program here are solely the opinion of the show and are not a specific inducement to making an investment. One must affirm their own due diligence to realize that all investments carry risk. There's no guarantee of profit. Alright, everyone, first one I want to bring up is Ford. Now, I brought this one up on the channel before. I have a position in these January 2022 15 strike calls. I think last time I brought up on the channel, I flagged that some people were buying these January 2022 20 strike calls. Now, there's some buying in these February 17th 15 strike calls. 33,000 contracts traded. As you can see here, Ford trades a heck of a lot of options. You can tell just by the open interest here, a good amount of puts and calls. When we look at this, there's a heck of a lot more open interest in the call side rather than the put side. So, that's something I take into account as well. That's definitely a bullish sign there. 33,000, something else I wanted to mention real quick is, there's a whole lot of open interest here, but, it is pretty unusual to see Ford trade 33,000 options in a single contract in a single day. I believe there's so much open interest here because of how cheap the stock is, how cheap the options are, and there's a lot of people my age, a lot of younger people that were buying up these contracts when Ford was $5, $6, $7, $8 a share, and I think they're still bullish on it. There definitely is some institutions in here buying these calls. Down below in the time sales, there's a whole lot to go through in that one, obviously, because 33,000 contracts traded. So there's a whole lot of orders to go look through there. So I don't want to take a whole bunch of time and look through that. But yeah, full disclosure, I saw people were buying these calls, so I've been in these January 2022 calls. I did the straight call here, and I actually added to my January 2022 15 strike calls. When I saw there was this much buying here, and some people might ask, why do you go out so far to January 22 or whatever? And it's because first off, I have high confidence that the trade is going to work out. I don't mind going out further and buying the extra time premium there. And also, I feel more comfortable holding it through the dips. Sometimes when you get a really short-term option, it is like you got to decide whether to cut the loss or not. If Ford takes a hit, $1-2 hit, or a pullback here, as we can see from this chart, from about 16.5 down to 12.5. That's a that's an alright size pullback, but I feel comfortable holding the option through that pullback because it's so far out, and I even feel comfortable adding to it because it's January 2022, and we don't really have to worry too much about time decay or anything like that. So that's why I like going further out for a high conviction trade. Now, as you can see here in a BHP, now this is a materials play, and we'll take a look at the chart in a second. There's something I want to mention there. So there's about 36,000 contracts traded here of the September 17th 77.5 strike call. Looking around here, there's about 9,000 open interest there. This thing does not trade a whole lot of options here whatsoever. All these open interests are less than 1,000. So to see people coming in and buying 36,000 of these things, this is a pretty cheap call option here too. The implied volatility is super low, so I don't mind buying a straight call when the implied volatility is super low. Implied volatility plays a huge role into the price of the options. So this is a relatively cheap bet. Once again, this is slightly far out of the money here, but it's a cheap bet, cheap implied volatility, and as we can see from the chart, this thing has had a huge pullback here from about $82 a share down to this $69, $70 level. Now, I'm a little cautious on this one because there is some news. So I believe China is coming out saying that they want to change the production, how they produce their steel and stuff, and I think right now they use a lot of iron ore in the process of making the steel out there. So I think using iron ore for steel, I guess, is like really bad for the environment, and I think China is trying to crack down on the use of their iron ore in their steel. So this stock, along with Rio Tinto, has been taking a little bit of a hit here. I think it'll bounce back. I'm super bullish on this material sector. This is definitely a reopening play. Definitely an infrastructure play. So I think it's taken a little bit of hit of with this China news that's been out for a little while now. But I think that investors will look past that, and I think that this thing could be making new highs here within the next 2 to 3 months. So I like those September calls. All right, everyone. Thanks to everyone who's been subscribing. I really appreciate it. Make sure to keep this subscribing up. Make sure to leave a comment down below if you got any questions, and we'll see you in the next one, everyone.